A lot of people are bleeding money every month without even knowing this. As a result of this bleeding, a lot of banks are profiting from this venture. Some of the ways through which we actually leak money in our bank accounts is through what I call hidden fees and high interest traps. There are different ways through which we are actually making money in our bank accounts, and at the end of this video I'll be able to prove to you that large sum of money are actually going out of your bank account without your knowledge every financial month. I'm going to be talking about 4 different ways through which money is actually leaking in our bank account or the bank account. Number 1 is what I call paying more than what you have to. A lot of us in most situations do not understand or know that we are actually paying more than what we have to in most of these banks. Some of the ways through we actually pay more than we ought to pay to banks or most mortgage financial institutions is through what I call overcharged fees. Overcharged fees are common in Nigeria, and they actually vary depending on the transaction and the service provider. These charges include ATM withdrawal fees, account maintenance fees, interbank transfer fees, SMS notification fee, USSD banking fees, stamp duty fees, VAT, and lastly, cyber security debt. There are many of them, just to mention a few. To avoid these overcharged fees, you need to, number 1, stop spending the money you do not have. One of the ways through which we spend the money we don't have is when we go for loans or credit facilities. When you go for credit facilities, you are actually making somebody richer. You are actually creating more value for somebody out there. Number 2 things you need to do to avoid this scenario is to check your mobile account if there's any money in your account. If there's no money in that bank account, avoid spending the money you do not have. Every time you actually spend the money you don't have or you do not have, you pay for overdraft fees. What do we mean by overdraft fee? Because I know a lot of people are actually eager to know the meaning of overdraft fee. An overdraft fee is a charge imposed by banks when you spend more money than you have in your bank account. Here is how it works. Number 1 is what I call interest rates. Bank charge interest rates on overdrawn amount, which can also range from 2 to 4% per month, depending on the bank and the type of account you are actually operating. Number 2 is what I call overdraft fee. Some banks charge a flat fee or a percentage of the overdrawn amount, while others charge interest on the daily average balance. Number 3 is what I call late payment fee. If your salary is actually delayed or you fail to repay the draft on time, you may be charged additional fees. So this is actually how overdraft fees actually work. Number 1, interest rates. Number 2, overdraft fees. And number 3, late payment fees. Now let's go into number 2, which is what I call you don't do the maths. Another way through which money is actually leaking in your bank account is that most of us, in our bid to make profit or in our bid to generate little amount of money for ourselves, apart from what we put in the bank account, we always go for what I call high yield savings account. In most cases, most people go as far as finding out most banks that actually pay high yield savings account. If you remember the story I told you about last time about a friend of mine that actually put some certain amount of money into his bank account and he was actually paid 35 to 40,000 naira for 1 year. What he did in this scenario is what I call high yield savings account, where some percentage of money is actually paid to you for keeping that money in a bank for over a period of 1 year. It's actually good to save money in bank accounts, but unfortunately, most of us do not understand the differences between saving money and also investing money. This is because after putting that money into what I call high yield savings account, of course, that savings account is going to yield some percentage of money for you at the end of the day. But the amount of money is going to yield for you is going to be a lower amount of money. If you actually compare, if you actually contrast what that money is going to yield for you by putting your money into what I call high yield savings accounts and inflation, and also paying tax rates on the money which you have actually put into that bank account, because at the end of the day, when they are paying you the interest on that money, they will also deduct what I call tax rates. By the time they deduct the tax rates, and by the time they minus it from your profit, what is actually remaining at the end of the day is just a fragment, it's just a little amount of money. Then now this little amount of money that is remaining now, compare it with the level of inflation in the country, then you are going to realize that at the end of the day, you are not making any money, because inflation or the inflationary indices is going to be greater than the money the high yield savings account is going to get you. In other words, high yield savings account profit compared or minus from the level or rate of inflation in the country will not generate a tangible profit. So money to high yield savings account is not good enough. It is not good enough because it cannot be able to catch up with inflation. Now let's assume that that individual that actually makes 40,000 naira in a year, and inflationary rate is actually at 24 point something percent in Nigeria. By the time you calculate the money and the comparison of that money in relation to the level of inflation, you are going to discover that the percentage payable to that individual is not going to be more than probably 2% at the end of the day, which is not a good one. So the high yield savings account will not go a far way, or will not go far in comparison with the level of inflation. In another scenario, assuming that guy actually puts his money into an investment portfolio and is getting a rate of 20% return on investment per annum, that means that that 5 million naira is going to fetch him an extra 1 million naira. Compare 1 million naira, which is 20% return on investment per annum, to 40,000 naira, which that 5 billion naira has actually generated that man at the end of the day. So high yield savings account actually generated 40,000 naira for you. But if that money is put into an investment at the end of the day, it's going to generate him more than 1 million naira at the end of the year. So the question is, will you still continue to put your money into high yield savings account, or you are going to invest your money. A lot of people will say that raising money in Nigeria is not very easy. But I can bet you that if you are actually zealous, if you are determined, if you are focused, you could save money to invest in profit yielding assets. What distinguishes money being saved and money for investment is that money saved is actually for a period of emergency because life actually happens. It is not for building wealth or wealth creation. So for those people that actually believe that when they save money, they are actually building their wealth. Saving money is not for wealth creation. Saving money is not for building their wealth owing to inflation. Another way through which money is actually leaking in your bank account is through tax. In Nigeria now, what is actually raining, most especially if you are a salary earner, is what I call payday loan. I've actually also obtained a payday loan before, but that was a long time ago when I did not have what I call financial education. Payday loan is actually popular among Nigerians. Payday loans will vary in Nigeria depending on the lender and the loan terms. That is, they are not the same. The amount actually vary from one bank to another bank. Payday loan is booming in Nigeria, and a lot of banks are making a lot of money from this process. If you actually know how much payday loan is costing you, you will never step into it again. If you actually want to borrow money in Nigeria now, the interest rate is between 24 to 38%. Now imagine you are actually going for a payday loan at the end of the day because you needed money to sort one thing or the other. You are going to realize that you are going to be paying a lot of money. Payday loans actually charge between 5 to 10% interest rate per month, which is equivalent to 120% equivalent per annum. That means that you are actually the type that you are addicted to payday loan. You will be paying roughly 120% of the money you are actually taking as a payday loan. In other words, you are making other people to be rich. You are actually creating wealth for other people. Don't forget, I am not saying that it's not good to take loan, but the kind of loan that you should take is a loan that will have a multiplier effect. That is, you need to have something you want to use that loan for that will yield profit for you at the end of the day. But if the loan is actually to acquire luxurious item, then I will not advise you to go for a loan because that's what I call liability. It is not yielding any value at the end of the day. Payday loans are actually addictive because you always wanted to do it over and over again. Most especially if you have done it for the first month, I have paid the money at the first month and it is very sweet. You always go for it at one particular time or the other. And that is why at the end of every financial year, most people are spending an average of 60% on servicing their payday loan, which is quite outlandish, which is quite outrageous, which is quite gargantuan, which is quite large. Another way through which you are actually leaking money in your bank account is what I call the flow of wealth. I could actually remember some years back when I was so engrossed in saving money in the bank. I used to smile at the end of every financial month, most especially when I'm going to the bank to save my money. The bank was actually doing me good, but on the other hand, the banks are also using me to make a lot of profit for themselves at the end of the day. And I noticed one thing at the end of every financial month or every calendar year, that despite all the money I put into my savings account, I do not get any interest back from the bank. But on the other hand, the banks are declaring a big amount of dividend for their shareholders every financial year. In this situation, a lot of us are actually guilty of this because we actually believe that saving money in the bank account can actually make us to be very wealthy. Imagine right now you have about 10 million naira in your savings account, and you actually believe that actually arrived. You actually believe that with that you can retire at the end of the day. I can bet you that that money will be eaten up by inflation at the end of the day, because that money is actually not generating any value. That money is not working, but rather it has become a dust in the bank, and the bank are using that money to make more money for themselves at the end of the day. When you save money in the bank, you get at least 0 to 4% interest rate, even if the bank is actually very lenient with you or they have pity for you. Now compare 4% which the bank is actually giving to you at the end of every financial year to an investment that is making you about 20% returns on every financial year. Which one are you going to choose at the end of the day? If I were you, I would choose an investment portfolio. When you borrow money from the bank, you pay between 27 to 30% interest rate per annum, depending on how many years you want to pay the money back. But right now, even in Nigeria, if you are going to borrow money from any bank now, you need to pay up between 2 years at a time. That is, if they are very nice to you. You either pay up everything within 6 months, or 12 years, or 18 years. At the end of the day, the banks are making a lot of money. Now the question is, who is actually making the profit at the end of the day? Is it the bank or you that's actually borrowing the money? The money is not going to the bank at the end of the day. The money is not going to you at the end of the day. The money is actually going to the shareholders, who are the investors in the banks. The profit that is actually made by the banks is going to the shareholders and the investors in the banks. And that's why investment is actually good. When you invest your money, for example, into banks by buying shares, it makes you a part owner of the banks, and it also makes you a shareholder of the bank. That is, if the banks actually make profit at the end of the day, you are going to get your own share. It is not only good for you to save the money in the bank, you also need to invest your money into stocks, into rental estates, into index funds, and other means through which you can actually make money in this millennium. The banks are making the shareholders to be richer, including the investors. And that's why we're actually in a capitalist economy where we have two classes of people, who are the consumers and the investors. Now, the consumers are actually those that buy every time, and the investors, or who otherwise I call the producers, are those that are actually making money at the end of the day. They are the ones that actually put money into something and get something in return. But if you are not investing your money, you are not making any profit, and you belong to the category of the consumers. Based on this, you need to think like an investor, not a consumer. Don't forget, everybody is actually a consumer in the society because we all buy every day. But the producers are actually the investors that put their money into something and they get returns at the end of the day. They are actually those that put their money into mutual funds. They are those that put their money into index funds, into so many things that can actually generate money for them at the end of the day. If you want more videos on this, you can watch my past videos where I made videos on where you can actually invest your money and make more money at the end of the day. Now, good news, I need to tell you this, that if you're actually an investor and you're looking for where to put your money right now, which is what I'm doing at the end of the month, of this month, you can actually put your money into what I call balanced funds. Because right now, balanced funds is actually generating about 42% return per investment in a year. So that means that if you actually put your money into balanced funds, after one financial year, you are going to get 42% return on your investment. But don't forget that a balanced fund is a medium risk investment, not like money market funds. If you want more on that video, I have also done video on balanced funds. You can go out there and watch my video. Based on this, I hope you now understand that you can actually become wealthy, you can actually become rich when you invest your money, not by saving your money. Because a lot of us actually believe that when we save our money in the bank, that is when we are actually wealthy. But that is not the way wealth is actually created. Wealth is actually created when you invest your money. That is, when you invest your money begins to compound. When we say compound, that is, after a period of 10 years, whatever the amount you have in that investment portfolio is going to be multiplied by 2. For example, if you have 20 million after 10 years, you are going to have 40 million. That is how compound interest actually works when it comes to investment. At the end of the day, amount of interest accruable in each of them are never the same. Some are 50%, some are 20%, some are 42%, some are lesser, and some are higher, depending on where you are actually investing your money. So you can now see there are so many things that is creating leakages in our accounts that most of us are not aware of. And number 2 is that most of us don't do the math. And number 3 is that we actually create leakage in our bank account through what I call tax. And number 4 is what I call through the flow of wealth. So you can now see that through all these 4 ways, a lot of us have actually been creating a hole in our bank account. But that does not mean that you cannot make an amendment today. You can make an amendment by following what I've actually discussed in this video. And at the end of the day, you can actually close up this gap by not creating any leakages in your bank account. Again, I believe I've actually gained something in this video. If I've gained something, please now subscribe to this channel, leave your comments, and don't forget to share this video to people out there. Till I see you next time, thank you and God bless you. Bye bye.